Hi everyone, Jarrett Clay here with IG Wealth Management. Just want to talk to you today about GICs, Guaranteed Investment Certificates. I get a lot of questions about GICs. People often assume that they're a best way forward, and I often find that when people work very closely with their banks, that they have a lot of GICs because they're really encouraged by the bank to have the GICs. But I want to get into a little bit of where that motivation to for the bank to have you invested in a GIC comes from. Because investors have the impression that they don't pay fees when they have GICs and that they're just making a solid rate of return. And it's a given that their solid rate of return that they get, is like it's generally pretty low. And what we know is it's guaranteed, so people really like that. But it's understanding why you're being encouraged so much to do this by the bank that I just want everyone to be clear on is that when you invest in a GIC at a bank, the bank in turn is turning around and investing that money in loans or mortgages. All right. And then or they can loan more money and have more mortgages if they have more GICs on hand. So when you are encouraged by them, they say, hey, yeah, put your money in with us. They're earning a large spread. Okay. So that spread might be in the example we have in the graph that we have here, if we want to take a look at that. So, if you give your money, I say $100,000 for a GIC, the bank might be earning 3.45% when lending out your money as a mortgage, right? And this is obviously old rates, but the spread would be about the same, right? And it's like, well, they're only paying you maybe 0.6% for that money. So your side of it, what they're giving you is much less than what they're able to earn by turning around those funds and loaning them back out. So the bank has a very high degree of motivation for its staff to say we need more GICs. So they're pushing GICs all the time. But remember, their bias is on the side of making money for the bank, not on what necessarily is best for you. So when you're looking at it, keep in mind the motivation for it. GICs might be a good fit for you, but they might not be. And you want to be able to look overall at what they're bringing to the table while remembering some other simple things like, if you have GICs in a non registered account and you're earning interest every year, like all GICs do, understanding that all the money you're earning is being taxed in that 1 year, right? So there is no tax savings at all in that. And you may want to instead consider something that has dividends or something that has capital gains, where maybe you get taxed at a quite a lesser rate for the same level of investment depending on what your risk tolerance is and what your overall portfolio looks like. So just keep in mind the open mind when you're being encouraged to invest, thinking back to why am I being encouraged to do that? And remembering what's necessarily best for the bank isn't necessarily what's best for you. All right. Thank you. Take care. Bye now.